Hi, welcome to Taz 2 Cents. Today on the show, we have the man behind Carbonomix. Carbonomix is a Twitter handle and YouTube channel focuses on carbon credits, specifically in the voluntary carbon markets. Today, we're going to cover a couple companies in the space, Aduro Clean Technologies, Abaxx Technologies, and Base Carbon. I think we get a lot of good points covered in this show, and I hope you enjoy the discussion.
Welcome to Tabs 2 Cents, the show where we discuss multiple income streams and macro factors affecting the world today.
Carbonomix, welcome back to the show.
Hey, thanks for having me.
Yeah, no worries. So last time you were on, it was 2022. August 1st was the release for that episode. And since then, there's been quite a few changes. Last time we talked a lot about ESG. We talked a little bit about the war in Russia and kind of some of the energy problems we could be seeing in Europe. This time around, I kind of wanted to talk about how carbon markets have developed the last year and a half. Wonder if we could just sort of kick it off with your take on the state of the voluntary carbon markets today.
Yeah, so we've seen quite a steep decline in prices, at least in what's reported in the OTC markets, and that's not necessarily reflective of everything that's going on, specifically because a lot of those prices can get skewed by relative illiquidity or some of the other factors going on there. So it's not perfectly representative of what's going on, but there has been quite a significant decline in what we've seen in the markets, although the markets have generally been growing continuously over time. And we've still seen a lot of the institutional interest, although it has died down a little bit. There's still deals being done all the same, and there's relatively a decent amount of action going on, but things have fallen off quite a bit as well. So
Yeah, but just in preparation for the show, I thought I would pull up the live carbon prices on the carboncredits.com. And to my surprise, actually, because I haven't been following this market as closely lately, nature-based offsets are year to date down 66% according to them, and aviation industry offsets 72%. I wonder what your thoughts are on a recession and how that may impact the voluntary markets, because it seems like a lot of these companies, when push comes to shove, they sort of leave their environmental commitments and they kind of just go back to holding on to as much profit as they can.
yeah, I think we're not at a point yet where there's the concept that American Tusa has talked about previously, was the idea that carbon credits would be given goods where the demand will increase, no matter what, no matter what's going on, demand will just continuously increase over time. And I think there will be a point where carbon credits reach that threshold, but it won't happen yet, just because some of those factors that would play into that are just not existing right now. For example, the green bond markets will need to grow significantly larger and play a larger role in finance, and instigate things in that way. So we're going to need to see some other things, as long with government mandates and some of these other factors as well. Those will eventually play into the markets and kind of make carbon credits recession proof in a way, relatively speaking. Any commodity will have a downturn in a recession. That's just how it is. But it could be far more recession proof than most commodities, in my opinion. But the factors just aren't quite there yet.
Yeah, I agree. It's still a new industry and it has its growing pains that way. And I agree with you completely. I think what needs to happen is it needs to be a financial pro to utilize the carbon credits, like whether it be in, green bonds, or perhaps if it comes out with some new legislation that they need to show their carbon on their balance sheet. And if you're offsetting enough, then you could get more investor interest that way and raise the stock price. But there definitely has to be some kind of financial motivation to keep these credits demand high. I wonder if you could just sort of give me your take on where we're at as far as the voluntary market and the cycle that they could be going through. I don't know. It's generally a kind of a boom bust and a couple times before a new industry like this really takes off. It seems like we're in a bit of a dip at the moment. I wonder if you think we're sort of at the bottom of this first dip, or how new you feel that this industry is.
Yeah, so as I was saying, I think sentiment will generally follow what's going to happen in the larger markets. And I don't, I'm not big in timing things and trying to figure out when exactly the sector is going to turn and, try to make all these different macroeconomic predictions. That's just not a game that I think is really worth playing. So I'm generally just going to position myself ahead of time, and if it takes longer, then it takes longer. If I'm buying quality companies and they're eventually going to reach revenues and cash flows, it doesn't really concern me what's going to happen in the short term. So, um, overall, it's just not too big of a concern for me. But I do believe that you know it could still be quite some time before we actually see a recovery in some of the ESG names and a lot of these other prospects, just because there's been such an undersupply in oil and gas and some of the other commodities that you know some of these different factors will go by the wayside, especially ESG.
Yeah, for sure. It's hard for them to make those commitments when money's tight. And I think where I was going with that as well, not just based on prices and stock price and offset pricing, is the maturity in the market. It takes time to build structure, and it takes time to build, interest. And I think for me, one of the largest factors will be the availability of credits to people and having a platform to be able to buy voluntary credits, buy and sell. And I know one company that you're really interested in is Abaxx Technologies. I wonder what you've seen mature in the industry as far as like the ability to buy and sell, or the quality of the credits, or perhaps the level of interest in different projects that are going on, or complexity in those projects and higher level people moving into those areas. That's the kind of maturity that I'm talking about. I wonder if you could talk a little bit about that and a little bit about Abaxx Technologies as well.
Yeah, as far as maturity goes, we still have a long ways before these markets reach any substantial level. I mean, I believe it was 2021 or 2022 where they just hit a valuation of $2 billion, and that's the entire valuation of the voluntary carbon markets. So
Hmm.
these are really small markets in the grand scheme of things right now. And it's going to take quite some time for things to play out. I think as we get closer to 2030, um, as we quickly approach those climate goals, we're going to see demand pick up pretty significantly, and by proxy, a lot of the development of the infrastructure that's necessary for these markets. But I think it's definitely been lagging recently, and I'm quite frankly, I'm not totally sure what's going to turn this around, because there's not been significant interest in these markets at the moment. But as far as Abaxx goes, Abaxx is developing a new commodity futures exchange and clearinghouse in Singapore. Um, so one of the contracts that they're going to develop is carbon contracts as well. And that's going to be paired up with other contracts that they're developing, like LNG. So you could potentially have net zero LNG. And these are some of the things that we could talk about more as well, and some of the prospects they have. But generally speaking, the infrastructure will develop over time. I thoroughly believe that as we try to reach net zero. And if we even want to reach net zero, then it's a necessity. There is no other option. We will have to use carbon credits. It's not an if, it's a when.
Yeah, for sure. I agree. There's too much energy consumption in the world, and our grid is not as clean as it needs to be to reach net zero. So carbon credits are pretty much the only way we're going to get there. And that's a really interesting note that you made there. I would like to talk a little bit about the net zero LNG contracts, for example, because I've always sort of thought of it as two separate pieces. But if you could pair them together and essentially you're buying net zero LNG or net zero crude or however it works, I think that that would be very attractive for some companies.
Yeah, we've already seen that happening as well in the markets. I forget which company it was. I believe Shell, but I might be mistaken on that. Had already been working on buying some net zero, LNG carriers. So there is some of that going on in the markets, but Abaxx is, sort of developing them hand in hand, where they'll have the LNG physically delivered futures contracts, and they'll also have the same for carbon. So you'll be able to pair those together on the exchange, and they'll have other contracts as well over time, like nickel, for example, which is had a lot of controversy recently with the LME because they had to cancel trades, and that was a whole debacle in 2022. So, and they also recently just found bags of rocks in their in their warehouses as well, and they're now instituting touch checks, I believe they call it. So to have people go in and touch the bags to make sure that it's not full of rocks. So there are some other issues going on there, and those are some of the markets that Abaxx is working to cater to, because they've been um, relatively abandoned by current market participants.
Yeah, I heard about that touch check where basically, they're not weighing them or anything. They're just touching the base to make sure it feels like nickel, which to me seems bizarre, but hey, whatever it takes to fix the problem they had. But so then, with ABAX, they're a financial software company. But I do listen to the podcast. It has their chief economist, Smarter Markets, and they do tend to focus mostly on energy and carbon. And I feel like there aren't that many financial software companies out there headed that direction, which I think could be a pro. I wonder if there's anything else about ABAX that you'd want to talk about.
Yeah, so as far as technology goes, the commodity exchange is just one piece of Abaxx and what they're developing in Singapore. And it's quite rare because it's going to be the only physically delivered commodity-focused futures exchange and clearinghouse in the entire Asia Pacific region, outside of China. So that's pretty significant as it is, but that's just the starting point for them, as the larger vision that they have is verification for different contracts and the physically delivered commodities, because they'll have different measurement and verification technology, as well as Ethereum smart contracts that will track the different specifications of the contracts and what's actually stored in the warehouses and other areas. So that's going to provide more information and more visibility into everything, and will hopefully avoid some of the issues that the LME is having, like finding rocks in their in their different shipments. So that's one thing there. So there's a lot more utilization of blockchain and distributed ledger technology that they're trying to work on, as well as investing in Web 3.0. And it's worth noting that this isn't a large part of the business right now. It's maybe taking up 10 to 20% of their time. They're mostly focused on the exchange, but this is something that they'll be working on more so in the future as well. So you're going to have different aspects like Abaxx's Verifier or the Vault or Messenger, which are going to be different apps based on what they call ID++. So more so focus on decentralization of data, where right now as things currently stand, companies like Facebook and Amazon, they actually control your data, and they control your different spending habits and all those sorts of aspects. But under Web 3.0, the ownership is actually taken back to the user. So anyone trying to access your data will have to actually confirm it with you, and there's more security around that. So, as far as verifier goes, verifier is going to be similar to Okta in a way, where more so verifying your identity and signatures as well. And Vault is going to be more similar to Dropbox and some of those aspects. And then there's Messenger as well, which is kind of similar to um, some of the different things you can do on Bloomberg terminals. So there's a lot of competition potentially for some of the existing software companies with more security thanks to some of the things that Abaxx is doing on blockchain. So a pretty complex company that has quite a significant long-term vision. So I'm pretty interested in it.
Yeah, absolutely. I wonder if you could elaborate a little bit on Web 3.0 and the significance of that.
Yeah, so Web 3.0 is mainly going to be that concept I was mentioning where um, it's more of a transfer to the decentralization of your data. So, a lot of these large tech companies will have to ask for your permission to do things. And um, some of these other aspects, like quite frankly, I'm not too focused on the tech right now. So I haven't done, expansive research on some of the different things that Abaxx could potentially do. But, it's pretty interesting to hear about overall.
Yeah, because I remember when I first heard, the Web 1, 2, 3 kind of deal. It was sort of, I'm not the most technical guy, so just thought I could clear that up a little bit. So appreciate that. I know another company you're looking at is Base Carbon, and these guys, from my understanding, they work with various voluntary carbon market projects. I wonder if you talk a little bit about them.
Yeah, so Base Carbon is a royalty and streaming company in the carbon credit space. So, some of your listeners may be familiar with companies in the precious metals sector like Franco-Nevada or Wheaton Precious Metals. Base Carbon is doing the same thing, but just in the carbon sector. So, they're providing upfront capital to a project developer to, fund a project or their operations. And in exchange for that, they get a stream or royalty on the carbon credits. And they have two projects right now. One is in Rwanda and the other is in Vietnam. And both of them are focused on improved cook stoves specifically and divvying those out in rural communities. So, those generally reduce pollution in the area and provide, higher quality of life for those people, significantly reducing disease, among other benefits. And because those cook stoves are higher quality and they require, less fuel to burn, they'll reduce the number of carbon emissions, and then that will grant the project developer carbon credits. So Base Carbon is interesting because they're one of the first companies to go public as just in the carbon space in general, but especially for royalty companies. They were the second ones to do it after carbon streaming. And they're actually set to generate some pretty significant revenues this year and probably reach cash flow positivity. But it is generally dependent on Vera right now because they've had one project verified, the project in Vietnam, and they've had that validated. So that'll start generating credits soon. But the Rwanda one, they're still waiting on. And, Vera's released some new standards for the cook stove methodology. So, there's a certain time frame they have to reach. So if they don't validate the project by, I believe it's June 28th, then there'll probably be some more delays on that because they'll have to change how calculations are done and work on some other aspects like the baselines for the project. But, that's sort of the original thesis on base there.
Yeah, the cook stove projects are kind of a win-win because you help communities find a more reliable, cleaner way to cook their food, and
Yep.
also you can get the credits back. And I didn't realize that. I think I listened to a podcast with the CEO of Base, and he was talking about the cook stove projects and how without them they would go into these villages and the ceilings of these buildings are just covered in smoke residue, and
Yeah.
it's really a terrible sight. So I think that's a good place to put your money for a couple different reasons. Even if you just want to know that it's going to a good good home. And yeah, base carbon, very interesting. These companies, the ticker, by the way, for anyone listening, BCBN.NE. And these are small companies. Base carbon, their market cap is 54 million Canadian. So we're talking a tiny company, and as far as I can tell, they're not profitable yet. And it's just sometimes with these new industries and non-profitable companies, I struggle because I got burnt. I've been burnt in the past, especially when in Canada here when they legalized marijuana. I thought that would be an easy play, but of course, regulation, competition, poor management, an immature industry, all of these things came crashing down. So I'm a little bit skeptical with the new industries like this and the small caps, especially when they're not profitable. Wonder if there's anything that you could say to that as far as the speculative nature of these companies.
Yeah, they are pretty small, relatively speaking, and it's pretty difficult to find one that is is truly trustworthy to the general public, just because they have such a poor perception of what most people call penny stocks. Anything that's, even though it's called penny stocks, I think it's anything that's below $5. So there's generally just a bad perception there already, and especially when some of these might not necessarily be scam artists, but some relatively sketchy management teams hop in here and try to make a quick buck off of retail investors. It happens time and time again, and uh, it's pretty difficult to vet management teams at this level,
Hmm.
and truly make sure that these are actually credible people. But it certainly can be done, and certainly I'm significantly bullish on the companies that I own. But there are some different aspects that you can look at to see what some more potentially lucrative companies might be, and some of these more trustworthy management teams. For example, looking at their level of ownership in the company, if it's relatively high, typically I'm looking for at least 10%, if not more, ownership in the company, so they have a pretty significant stake in seeing the company succeed over time. And some of those other factors as well, like do they have previous experience in the industry? And something that I don't personally do too often is actually interact with the management teams, because that's something that you can actually do in microcaps. You can't call Tim Cook and expect to get a response. It's just not going to happen. Um, but you can call these management teams and talk to their IR departments, and you'll get a response, because quite frankly, there's not even a lot of people calling in general. So you can get a lot of information that way, and you can try to vet how trustworthy these people are. Um, but those are some different aspects or some things that you can look at to try to find some more trustworthy people.
Yeah, I think the management team is huge at this level. And it really is, as you say, hard to vet them, but perhaps some of these guys are spinning off ideas from larger companies, and you can look into their history from where they previously worked.
Right. Yeah, exactly. Yeah, that's a large part of it. Seeing, what industries have they previously worked in. You can also look at the history of just the company they're working at right now. Um, there'll be quite a few companies that you'll see in the carbon space where they were originally working on something totally different, or especially just not even in the carbon space, but whatever's hot at the time, like marijuana or NFTs. Some of these different previously hot trends that have died off pretty significantly. But you'll see a lot of those companies pivot to whatever's hot, and especially in the mining sector too. Um, some of these different aspects. But there was one company that I was looking into briefly. It's called Deep Market, and they previously been working on, just online games or raffle games, something like that. So totally different industry from what they were pivoting into, and they were working on carbon credit minting for NFTs. So that's just a total, left field change, and that can work. But oftentimes you'll see that a lot of these companies fail, and you can kind of see the signs ahead of time too. So
Yeah, I've made that argument before about energy companies and carbon, because I think that oil companies and energy companies in general are going to have a first mover advantage once we get to a real crunch for net zero and at 2030, as you say, because oil and energy companies like Shell, for example, they live and breathe carbon. This is their world. They completely understand it and they know what they have to do to achieve those levels. Whereas some other companies like tech, for example, I think tech likes the idea of carbon because it looks good for their corporation, but they don't necessarily have to live and die by those rules like energy companies. So I think potentially they could be behind the eight ball and they may even need to go in and buy credits from energy companies just to meet their requirements in the future.
yeah, and if I step in, you'll actually see that quite a bit because um, something that's interesting is just how expensive direct air capture is right now.
Hmm.
It can be upwards of several $100s per credit, per ton. So it's really expensive, and you'll see a lot of the oil and gas companies are the ones that are mainly developing the technology as things currently stand. And um, it's definitely integrated into their business as it is. It's one of the most polluting industries, so clearly they have a good handle on it. And also, I believe they were hiding the fact that climate change was occurring for a long time, so and
Hmm.
conducting different studies on it. So that's another aspect of it. Uh, but yeah, they're the main companies that are developing some of this technology, and they're Shell stepping in and buying essentially the entire market's worth of demand um, on their own, just from one company, by 2030 for carbon credits. So they're going to be big buyers in the space, and they understand it relatively well. Um, they're going to understand it more than most other companies. So they're definitely going to be big players.
Yeah, and especially for a company like Shell, it gets complicated because, in North America, they could be playing in the voluntary markets. In Europe or like in the EU or in the UK, they could be dealing with compliance markets. So, the technology can be utilized in a couple different ways for them, I think. And, they can do carbon sequestration and they can do all these new modern techniques for oil, but it is, very complicated and it has to be additional and it has to be all these things. So it's going to be interesting to watch it play out for sure. And something that kind of grabbed my attention as well, just another company that you're interested in is Aduro Clean Technologies. It's ACT.CN. And these guys, they do water-based chemical recycling. And from what I understand, they can transform waste plastics and heavy crude, bitumen, and renewable oils into renewable fuels. So I wonder if you could talk a little bit about that because that sounds like a very promising idea.
Yeah, so something that you'll notice is that the vast majority of the plastic waste that we think is getting recycled is not getting recycled at all. So, actually less than 10% of plastic waste is being recycled. The rest of it's just going to end up in landfills or getting dumped overseas. So, this is a major global problem. And most of the existing technology out there right now, it has one type of issue with it or another. Like they can only recycle one specific type of plastic, or it uses up too much energy, or there's some other issue with it that I've mentioned previously in some of my videos. But yeah, Aduro is developing a new process called hydrocomolysis. So it's going to be a reaction using water. So there's going to be lower required temperature involved, yeah, along with a chemical catalyst as well, which many times they'll actually be able to just get from the waste feedstock itself. So that's pretty interesting in its own right because there's no other technology like it. And right now they're doing they've already done lab testing and had the process confirmed by peer review to work for breaking down bitumen, like you said, which is asphalt. And that was confirmed to process a few kilograms of bitumen per hour in what they call an R2 reactor. And now the company's testing that same process for plastic. So the plastic R2, which is going to be the same process, should be operational around any time now. And they've got the reactor mechanically complete already. So, once they have that done, they've done all that testing, then the next reactor is going to be the R3 reactor, which is going to process a few tons of plastic waste per day. So that'll probably be complete in 2024. At which point the company would have proven the scalability of the technology. So there's going to be a lot of interest there. And we've already seen interest from large companies like, Shell, we've already mentioned, has Aduro in the Shell Game Changer program. So they're providing, financing in different phases for that project and seeing it all the way to, scalable commercializability. So, that's a pretty big deal because Shell is recycling or looking to recycle, 1 million tons of plastic waste on their own. So that's going to be pretty big for Aduro if they can land that. But as far as what they actually can recycle that plastic into, it was like you said, they can, break it down back into diesel or kerosene, some of these other fuels, or they could also bring it back into a naphtha cracker and turn it into plastic again. So it's really versatile technology. Really scalable as they can kind of interchangeably add or subtract different reactors. So they've been developing the technology for a long time, over a decade now at this point, I believe. So it's been a long time in the making, and we only actually have this opportunity because of COVID. And they were originally going to get bought out, and they weren't publicly listed, but because of COVID, that deal fell through. There was a lack of liquidity generally. People didn't know what was going on. So, Duro had to go public, and that's the only reason that we even have exposure to this right now. And it's, all the companies we've mentioned are pretty significant portions of my portfolio because they're the only ones I own. I'm extremely concentrated in 3 companies. So very excited to see what's going to happen over the next, year or two.
Yeah, for sure. Definitely plastics have been on my radar. And especially because I saw a post from carboncredits.com. They were talking about plastic credits. And this seems like a very promising idea, especially for a company like Aduro, because if they come out with this company's based out of Sarnia. For anyone listening, the market cap's 58 million Canadian, so another small cap player. But if Canada comes out with some kind of, and it could be, I'm honestly not even sure if it's out there already, some kind of plastic credit program, they could benefit from that.
Yeah, I did see that. And generally speaking, there's various subsidies that Aduro's already been tapping into or could potentially get in the future. So that's limited dilution as well for the company. But yeah, I didn't look at it too much, but I think I did see that article about plastic credits. And there's definitely a lot of subsidies in the industry already, and it's the only way that some of these other technologies are actually going to be profitable, because most of them are pretty inefficient at this point. So it's definitely something I could see because it generally fits with the theme of carbon markets and supporting technology that's not quite there yet and not quite profitable on its own. So I could see that being a relatively big market in the future, but we'll have to see.
For sure. And when you look at a company like Aduro, do you think this company is going to be a standalone company forever, or do you think that they could be a decent investment just based on their potential for a like a sale to Shell or something like that?
Yeah, I know it's been discussed, and I know that management wasn't talking about selling until the stock is significantly higher at this point. But I could definitely see the company getting sold over time. But at this point, they've decided that they want to build things out and at least see the technology through to scalability at the very least. But I don't think they have any plans in the relatively near term or the foreseeable future to do that. But the high likelihood is that they eventually do sell the company to somebody, and it'll probably be significantly higher from here. Is my estimation. But yeah, we'll have to see how that goes.
Yeah, in most cases, especially with some of these sort of ahead of their time technologies, the purchase price is going to be higher than what the market has it at generally. And it's almost like sometimes you find a really good company and there's an acquisition that happens and you're almost upset that somebody bigger sold them because you're not looking for shell shares. You wanted a plastic recycling company.
Yeah, exactly. And that'll be pretty unfortunate to see if that does happen, although certainly not complaining about, however many bags it would be. It's a significant amount. But, just comparing Aduro to some of its peers in the market, the most common comparison is to PureCycle, which has $1 billion market cap, and they can only recycle one type of plastic. So that's already a disadvantage there. And their technology is leased out by Procter & Gamble. PureCycle doesn't even actually own their IP, as Aduro actually does by contrast. And so, Aduro at 50 million market cap, whatever you want to call it, and compared to 1 billion, and PureCycle doesn't actually have an operational plan yet either. So while Aduro is behind in the development cycle, probably at least 1 to 2 years, it's a significant contrast in the market cap, and it speaks to the hype that was previously in the plastic space and what already exists as well. But Aduro's pretty unknown at this point. So as they ramp up marketing, I think there'll be a pretty big run.
Yeah, this company has a couple things that interest me. I don't hold any at the time of this recording, but I have been looking at it. And it's one of the things that I love about this podcast is I get to talk to people like you who are invested in the company and know a lot more about it than I do as a kind of a way of research in its own right. And I really appreciate you sharing your insights on these companies because they are some companies that I've been seriously looking at. And what I like about Aduro is that on one side, they're recycling plastic, which I think plastic is going to be a new enemy over the next decade. It's been carbon for a very long time. And I could definitely see once we sort of get carbon settled, I could see plastic becoming, a new war. We need to conserve plastic. We need to recycle more plastic. We need to get these plastic initiatives up and running because it could be impacting the ocean in different ways that we don't know about yet or something like that.
Right, yeah.
And Aduro could be in a position to benefit from that narrative if it happens. And also on the other side, they're producing, clean fuel, renewable fuel for, let's say, a miner needs to find some kind of low carbon diesel for their trucks to get the green bonds we talked about. Maybe they go to Aduro for those. So I think there's a lot of pros for a company like that.
Yeah, generally speaking, it's just going to be a massive problem. There's around 350 to 400 million tons of plastic waste per year. Most of that is obviously not getting recycled, so it's going to be a huge issue. And you're already seeing the narrative around it ramp up a little bit. There are goals to try to have most plastic recyclable by 2025, and some of these different aspects that some of these large corporations that are in the plastic industry or the general oil and gas space are kind of looking into for a large part. But there's different, like I was saying, there's different narratives around it, like microplastics ending up in the bloodstream and in the oceans generally in our drinking water. So that's that's certainly startling, to say the least. And
Hmm.
there's also, the large garbage patch in the ocean. And generally speaking, it's just a lot easier to have that narrative around. And generally speaking, it's easier for ESG when we have some of these large events or large uh, pollution areas going around, because it just makes it all the more obvious to the public that something needs to be done.
Yeah, I try to keep this as matter of fact as I can when I look at narrative shifts. And I'm not trying to say there's corruption or anything like that going on. I really don't know. But I think that if they were going to shift the narrative to plastic as opposed to carbon, there could be a lot of money to be made there because it is such an immature industry and it is such an easy enemy. And we are already seeing a couple things happening, very small shifts. Like, for example, we're getting the paper straws, and here in Canada, grocery stores aren't selling plastic bags anymore. Just very small, subtle changes, and you almost wonder if they're kind of testing the waters to see how far they can go with it.
Yeah, I think it's pretty unlikely that you're going to see consumer consumer preferences change that drastically, right? I think
Hmm.
it's been talked about previously by people that invest in Aduro, and even the company themselves, that it's pretty unlikely you're going to see plastic consumption drop in any significant way. Um, it's it's just not possible, especially globally, where a lot of the citizens aren't going to care as much about some of these things. And a lot of the work is not going to be done there. It's mainly going to be done in some of these different solutions that we're talking about, like carbon credits and these different industries funding these companies and projects. And also in the plastic space, I don't think it's going to be a transfer from dealing with carbon to dealing with plastic. I think it's just going to be a general concerted effort on all fronts. There's going to be developments in new technology and new narratives emerging, across the kind of ESG space, if you will. And I think that recycling plastic is just an extension of fighting carbon emissions, because plastic is derived from petroleum-based products. So it's just another aspect of that narrative in general, I think.
Yeah. And again, this for me it's difficult because one of the companies that I purchased stock in is Energia. Yeah, the ticker is ANRG. And this is a company that builds, owns, operates. They call it the BOO methodology of business. Landfills. And what they do is, I'm not sure if you're familiar with these guys, but they own the landfills and they put in the technology to capture the methane and they create renewable natural gas. And especially during the natural gas shortages that were expected to happen in Europe this year, it seemed like a great way to get in on that because we're talking, carbon net zero natural gas essentially, and it's renewable natural gas. So it seemed like a good investment at the time. And this company, year to date, just this year is down 82%. And it's a lot to do with a lack of macro factors that didn't occur the way they could have. So it's tough sometimes with these companies, and I think for Aduro, I do wonder what kind of headwinds they might see because there is always risk.
Yeah, well, the primary risk, of course, is that, because they're working on scaling up their technology right now, is what happens if the results aren't as good as they expect, right?
Hmm.
So that's obviously the chief risk there. they don't actually see it as it's actually been specifically worded by management that they don't see that as the largest risk the company has, because they generally expect efficiencies to actually increase as they scale things. So they figured the main risk was actually in the lab work, but there's always risk there, and obviously, potential investors are going to want to see proven scalability to multiple tons per day before they're before some of these larger funds can truly step in, and we could potentially even see a buyout. So we're gonna have to wait for that. But as far as the larger plastic narrative goes, I don't see a lot of headwinds there, and funding hasn't been an issue for this company because they'll receive grants, and the stock price has held up pretty well because there's a pretty loyal shareholder base and people can see the potential of the company. So there's a lot of different aspects there that I think are playing in Aduro's favor. So it seems like they've been okay so far, and they've secured funding until they actually reach that multiple tons per day stage for the R3 reactors. So they don't have to worry about funding for quite some time here because they keep the burn pretty low.
Yeah, and that's good to hear that essentially what it boils down to is their technology has to work. And if it works the way it's advertised, it could be, a very interesting company to look at. I have to agree with what you said earlier about plastic narrative. I did hear the microplastics in the blood thing, and I think what I read was it could be potentially affecting hormones and things like that with people. And there's a giant garbage patch, and you do wonder what kind of an impact all that garbage in the ocean, which of course our planet is mostly water. You wonder what kind of an impact that would have on warming as well. But you don't really hear them talk about it that much. But I'm sure there's somebody out there studying that.
Yeah, I don't know exactly how much of an impact it has. I know that the ocean and water in general does hold a certain level of CO2, and there's different aspects to that. So that could potentially be a factor. But I think largely, it's not difficult on selling people that there's an issue. It's becoming pretty obvious at this point. Whenever you go on YouTube and see that there's different videos about plastic, I mean, some of them get millions of views, hundreds of millions of views. So it's clearly an issue that people know about, and it's something that they care about. And I think ESG in general has that sort of tailwind to it, where there's clearly an issue as far as most people are concerned. Like there are climate deniers, and there's a certain aspect to that. I'm not overly zealous about environmentalism, but I do think that there's a lot that we can do as human beings, as a species, and I think it's reached a point where the narrative is not going to go away. So that's not a problem, I don't think.
Yeah, and me personally, I'm not a climate denier, and I'm not. I just, for me, I'm so uneducated in the space that I just sort of roll with the punches and try to invest where I think that I can kind of benefit from some of the tailwinds in whichever direction we're going. And I have to agree with another thing that you said earlier. This sort of just came back to me. I had this thought earlier, but I couldn't remember it. And what it is consumer. The way that we consume plastic isn't going to change easily. So, for example, in Canada, they said no more single-use plastic bags at the grocery stores. So, what some corporations have done is said, well, we'll still sell plastic bags, but they're dual or triple use, but they're the same bags. They just made the plastic thicker. So now what you have is the same amount of bags, but triple the waste, because people now are buying these 3-time use bags, but using them the exact same ways they use single-use plastic bags before. So it's a lot like carbon. I think plastic, until it's profitable to use less plastic, they're probably not going to do it. So we're going to have to rely on companies like Aduro to clean up that mess, I think, rather than rely on people's habits to change.
Yeah, and it's like you mentioned previously, there needs to be a financial incentive for these companies to make changes, right?
Hmm.
Um, there, there's no reason that they're going to change anything. They're not altruistic. They're focused on profits for the most part. So, you'll have the large companies like Apple or Microsoft, these software companies that they don't even emit a lot of CO2 in general, but um, whatever they do emit, they'll cover it with carbon credits or some of these other things. So there's going to be action there, but for other corporations in general that have a far higher carbon footprint, you need to make it worthwhile for them to do it, and it needs to be uh, if it doesn't change anything, it needs to be profitable. So at, at the very least, it needs to be break even, where it's not going to hurt the bottom line too much. But ideally, it actually is profitable for them to do it, and that's one of the aspects that makes Aduro so exciting, because now typically when there's one of these other recycling technologies, it's not very profitable to recycle that plastic, and now they're hopefully going to make a more profitable process. So that certainly aligns incentives there.
Yeah, absolutely. And it has to essentially, at the end of the day, all the corporations are going to care about is, does it affect the bottom line? But there are a couple ways to do that. So if, if plastic becomes a big enough enemy and the narrative gets strong enough and they think that they can build a little bit of reputational, or a little bit of a reputation for environmentalism, they will take action against plastic as well and perhaps get more sales that way. So it's not always, you know, as simple as it seems. Well, we're going to buy plastic credits. Maybe they're
Right,
going to
right.
going to do something else to gain some profit a different way. So, yeah, I think that that's a really good point. And I thought I would just give you an opportunity to, before we end the show here, talk a little bit about the mining industry, if you like, because I know that you've focused a lot on that in the past.
Yeah, sure. So I did mainly invest in mining for a long time. It's only been about 2 years now where I really focused on long-term investing. And previously, I was focused on the mining sector, and specifically explorers. And I think it's a common trap that people step into, investing in these different resource companies, because they see the potential for high returns. Like they've seen Rick Rule, and he talks about Paladin Energy and uranium, where the company went up 100-fold or 1,000-fold. And there's some of these different stories that really bring people in, but um, overall, it's just an incredibly toxic industry where there's so much wealth being destroyed at all times. You're constantly getting diluted as a shareholder, and commodities in general are just a horrible business. Margins are low or negative for most of the time, and overall, it's just generally cyclical. So it requires a lot of timing, which most people, if they truly think about it and ponder it and reflect on their experience in the mining industry, the vast majority of the time, it's not profitable whatsoever. You're just consistently getting screwed. So it that was a pivot that I made, was to long-term investing and focusing on um, at least higher quality companies, or companies that could potentially develop a strong moat. Although all the companies I own right now, and this is partly because of ESG and my focus on that, but a lot of the companies I own right now are not profitable, but they could have strong moats when they do start to generate revenues, which should be soon for several of them. So, that's some of the different aspects that I've taken. And, I think people need to think long and hard about investing in the mining industry, because it's just so difficult to succeed, and most people don't truly know what they're doing. And I tried to work around that, and do different things like picking management teams that had prior experience and success. So there's at least a higher chance there that good things will happen. But it's such a complex industry that most people just don't truly understand. And I think there's far easier money to be made, I think. if you can do it, then it'll work out really well. But for most people, it just doesn't.
Yeah, that's a fair warning for anybody who's just if is thinking about going into investing in mining. And it's interesting you mention the difficulty. I had Jamie Keach on the show. I don't know if you're familiar with him. But he's a big mining guy, and we discussed some subjects, and I kind of asked him what metals he would look to for the transition to green energy, and he said, nickel, copper, and uranium. And I think that's fair, but he also mentioned that he gave some of the similar warnings to people. He said, if you're going to invest in the small guys, be prepared for volatility. And maybe if you really like copper, then go for somebody bigger like a tech or something like that, because it's almost two completely different beasts when you get into small cap mining as opposed to a large mining corporation.
Yeah, exactly. And I do know Jamie, and I like him, and we've interacted a decent amount on Twitter, and you know, a lot of those criticisms are fair. And I know that he's also involved in the carbon space as well with Vita
Yeah.
Carbon, and he's the chairman there. So he's definitely throwing his hat in different rings and different arenas. So it's pretty interesting to see what he does. And there's also there's that aspect where it's easier for guys or gals that have been interested in mining or commodities to jump over to carbon credits. We can understand it a lot easier than other people. Um, Although, a lot of the guys in mining tend to not believe in climate change as much or have some different politics, but um, there's generally a better understanding there because they have previous experience with commodities. They understand, the supply and demand aspects, the cyclicality, some of these different things that'll make you more attuned to the space. So you see a lot of the management teams in this area coming over from royalty companies in the mining sector and some of those other companies over there as well.
Yeah, I agree. And I actually found carbons sort of from an interest of commodities as well, coming from looking at oil players. And it was kind of back and forth really, because it was carbon credits led me into some of the interesting areas that oil and fertilizers and things like that are developing carbon reduction programs. It's all very intertwined in energy and mining. And one thing that Jamie mentioned was in BC, like British Columbia and Canada, the copper miners there are potentially energized by renewable energy for the most part. So you could potentially have a product coming out of BC that's net zero copper. And I wonder if you've used what you've learned in the carbon markets and kind of brought that expertise of mining as well and meshed those together to look at some of those companies that could potentially benefit from net zero and carbon in the mining industry.
Yeah, well, that's specifically one thing that Abaxx is working on is um, generally over time, and something that Robert Friedland has pointed out as well. He's a billionaire in the mining space. Um, he has a company where his large copper project in the DRC is actually going to be, I believe it's almost entirely powered on hydro. So um, he's generally looking to have his company get a higher price for carbon or for copper, excuse me, because of that general ESG aspects there. So this is something that Abaxx is working on, and generally tracking the different aspects of each individual shipment for a commodity or each specific project and some of these other aspects where um, you'll have a general recognition of uh, some of the greater properties about particular projects over others, and which ones emit more and emit less and have different prices based off of that. So there's generally a market that's going to emerge over that over time, in my opinion. And I think Abaxx will probably be at the center of that, and some of these different projects will be rewarded accordingly with higher prices for their commodities because of that.
Yeah, very interesting times, and certainly the transparency that these, blockchain smart contracts can bring to the commodity space is going to be a game changer, I think. And I'm by no means a blockchain expert, but I do know that you can do very interesting things with smart contracts on the Ethereum chain, and I'm assuming that's what Abaxx is going to do. Um, with that being said, I wonder if there's anything you wanted to add, or if not, maybe you could let anybody listening know where they can find some more of your content.
Yeah, so as far as Abaxx is concerned, yeah, it's it's generally going to be based on Ethereum, and there's going to be better tracking there. So you're going to track the different missions based off of shipment and what project it came from, some of those different specifications that it can be more difficult to get visibility on as far as current things are concerned. Just because finance is one of those generally outdated industries where there's still a lot of processes that can be improved. And uh, I know that CME is still in the process of moving things over to the cloud. And you know, uh, Abaxx's CEO Josh Crum has touted that this exchange, when it launches, is going to be essentially uh, two technology phases, if you will, ahead of the competition, as they're working with blockchain and some of these far more advanced technologies right now. So that's definitely interesting for Abaxx as far as that goes in the technology aspect. But as far as what people can find me on, they can find me on Twitter, at Carbonomix with an X at the end, and also on YouTube, same name. And those are going to be the main two ways that people can find me or reach out. And generally just making content on anything ESG related, especially stocks and financial markets in general.
Awesome. Well, thanks so much for coming back on the show. Really appreciate your insight here, and I think that we'll have a lot to talk about as we move forward. So I'd love to have you back on again.
Yeah, will do. Yeah, just invite me back on. I'll definitely come on again. Appreciate it. Thanks for having me.
Yep.
Joe is not a financial advisor and may have interest in the stocks discussed on the show, so do not take any information included within this podcast as a recommendation or formal advice. Thank you.